just for the new week. I think based on the votes, I think three assets were the most. We start from synthetic, right? I think three assets were the had the most votes. I think it was V75, VIX 10, VIX 10, VIX 10, and VIX 25. All right. So these are the three main assets that were had the highest votes and all of that. All right. So this would be 75. All right. We have been. I don't know. We don't have weekly charts on this particular guy. I noticed something with synthetic indices today. I don't know. My DERIV account is telling me something about server something. Does anyone experience that? Telling me I change server something like that when I was trying to log in on my MT5. Did anyone experience that today? Or does anyone have any issue with logging to DERIV using MT5? Anyone with that issue? Or is it just me?
Sorry, we couldn't hear the issue, sir. Can you hear again, please?
Anyone with the issue? The issue of logging to DERIV with MT5? Like, I was trying to log into my MT5. You know, like some DERIV, but the thing about DERIV, my broker changed server, something like that. That's why I can't log in. Because I can't log in. Or can your MT5 work properly? Like you guys?
Yes, mine has been working.
It's working properly. Also, go to the thing. Right. So we start with V75, then V10, V25. Let me confirm. V25. Okay, so 25. Right. So we'll start from the higher time frame. Now, before we actually look at this, I want to say something. If by all means in this new week, avoid doing this when the market is bearish. Avoid this buying to set POI. By all means, avoid doing this. By all means, right? Avoid it unless you see a clear evidence. But avoid by all means. Try as much as possible to avoid doing this. You have a set POI inside there. Avoid trying to buy into it because there's every likelihood that's reaccumulation may end up with sell. That means there's every likelihood that the market may buy somewhere and stop around there and then dump down. So if the market is bearish, try as much as possible to do what? To catch only the sell move. So you're looking at for sells. Right? As the market makes a new low, then you have what a new range low. So it's your new S&D zone. Then you should always looking to catch sells. Okay, that's what you should look at for. You should be trying to buy into this, then catch yourself. Although sometimes it works, most times it ends up being a problem. And so price is responsible to trade with the trend. That's what basically a trend following the trend meaning that you're looking to only to sell. As the market is short, you're looking to only sell opportunities and all of that. Unless maybe the break of structure at this point is actually maybe something like 4 hours, something a bigger time frame. But by all means, to avoid that. So let's look at V75 critically. So looking at V75, I don't know, I don't have access to weekly charts here. I think I do. Let me try to see if I can open my MT5 on my laptop. Let me see. I can open it. So we have access to weekly chart there. All right. It's loading up. So looking at 75, and we don't need any profits or see to tell us that this guy is super bearish. Like, right? Okay. Let me see this. I'm going to log in. Try to see something. Right. Can you imagine? It's opening on my laptop, but it's not opening on my phone. Okay, that's serious. All right, let me just share my MT5. That's my demo account. Because I don't really trade with my laptop. So let me just share it. Let's look at the weekly time frame from that. All right, so share screen. All right, this MT5, I think on the weekly time frame, and this weekly time frame, and based on what I can say, I'm kind of sloppy with this. We have had, let me just do this. I'm not really so good with this guy. So looking at this, I can actually see that we have a kind of bearish structure. Right, we took out the buy side liquidity, and all we have been doing is what gravitating towards the sell side liquidity. This basically what has happened on the weekly time frame. So usually when price takes out a protective high on a bigger time frame, usually and you find this kind of reversal, you didn't need a profit to tell you that most likely um, it's likely going to go for the buyers, because the buy side liquidity is usually at where the sellers are looking to sell. So we call it the buy stop liquidity or whatever. Right. So basically, let me use in simple terms. When price takes out by sellers on an overall chart, you usually expect to see the opposite movement, because price is drawn to um, liquidities and imbalances. As price took out this liquidity, is you normal to assume that or expect. So it's normal to expect that. Oh, it's not the back home. Right. It's normal to expect that since price has taken out what the liquidity to the upside, you should expect to see price gravitate towards the opposite side. And looking at this, I could see so much liquidity build up here. Look at this. We had this trend line, right? So you can see that there was liquidity build up. So as price took out, let us zoom this. So as price, let's assume we're not seeing all this. So as price took out what the liquidity to the upside, which is this protective high, it was safe. And notice that price did not close above. So on this chart, we did not actually see a break of structure, because we use candle bodies to denote break of structure, right? Not wicks. So wicks are usually just market trying to take out liquidity and then reverse. So what we had on this guy is what we call a liquidity run. So on the weekly time frame, V75 was going for the sellers, was taking out the sellers, and then when price took out sellers, we now had liquidity building here. We saw this trendline liquidity, right? That was the first thing there. Now we are seeing what relatively equal lows at this point here. These lows are okay, kind of trend line as well inside it. So we had trendline liquidity building up, right? And there are some traders that their duty is to look out for trend lines. They're looking out for anything that looks like a trend line and all of that. And you can see that as price took out this, I think Jimmy said something like it was going to crash when he saw this. As price took out this, now if you're actually smart money, when you have taken out all the sellers here and wicked so high above it, there's no point trying to still buy price. Remember that smart money is usually they go for where they are opposite traders. They're looking for to take your orders. So after they took out the sellers, there was no logical reason, unless maybe they had one and they did not tell us, but there was no logical reason for them to keep driving price upwards. So what they had to do was to do reverse price and do what? Go down. And we had what? Traps. This one, some people like after the third touch, it's going to hold, it's going to hold. All of that, third touch, 1, 2, 3, bam, clapped them. So then if anyhow you did it, you would have been clapped on this, right? And then you actually see this on this perspective, right? You can see how price has been doing was giving a sell setup. So after this ran through, and this is something that mostly my private students understand. After price ran through this liquidity, we had was the open of the weekly candle, the manipulation, and the drop down. Open, manipulation, drop down. Open, manipulation, drop down. So open, manipulation, drop down. Then finally we had the reason why price came higher was, to fill this imbalance. Where's the box? I'm kind of sloppy with this guy. Kind of sloppy with this. I don't use MT5. Kind of sloppy with it. What would I say? Box now. Okay, insert objects. So you see a box inside here. Ships here. You see a box here. Right. So price came for this imbalance. So that was the reason price drove higher to what fill this imbalance and still get it open manipulation drop down, open manipulation drop down, right? So I don't know, maybe there was a reason why price came. I think that kind of IC candle inside there. So price came there and market has been dropping down. Everything the market has been doing was what? Creating liquidity and dropping down. And if anyone saw when the market was somewhere around there, the person would likely think it was starting going to buy. Look at this. Another kind of trend line, you can see, there. Price has just been dropping down. So this is what I was looking at, and you can see it's kind of still broke to us. So that price may likely reject there. And you can see price has clearly gone below it. So this guy is super bearish on a bigger time frame. And will the markets continue going lower? I don't know. Looking at this, I can see we have look at liquidity. My God, look at liquidity all the way down here. So price may likely come for this overall. And there's a possibility that price may come for this relatively close, and this may be the final objective or this. Because we have lows here. Because this is actually a very good area of liquidity. Or in line with this point as well. So we have liquidity resting here. So all this is actually liquidity at price may gravitate towards. Alright? So and alright, I think that this is basically it. I'm not so good with this guy. I don't know how to delete these stops now. Okay. Delete all arrows. Delete. Okay, let's have to delete it. I have to just click on it and kind of slap it. This particular guy. Right. You kind of deselect all. Alright. Alright, so let's go back to what I'm very good at using, which is in trading view. So we'll just simply go back to trading view. Share. Back to trading view. So now I've understood that the weekly has been super bearish because we took out this is the upside there. So now what should we expect this week? Now looking at this, we had a very well, you can see what the market has been doing. So we had this bearish breaker. This was actually a breaker block. Last down candle before was swing up and down. So markets came for this last down candle. That was a breaker, which after this breaker form, we had this liquidity run. Alright, so liquidity run. There, if you don't know what breakers are, go to my YouTube channel. I made a video on that. Right, so we won't be going over what I've already explained. So if you don't understand breakers, you may need to watch the video on breakers on my YouTube channel. So there was a breaker block here. And although some of you that are smart learners be like, okay, I see candle, but look at it closely. Look at this chart closely. There was not any imbalance here, nope. So there was a lower probability of the market getting here because if you can look at this chart closely, this buy actually started somewhere around there. It was not necessarily the last buy candle. It was somewhere around there the buy started, right? So if you use here, maybe the lower week of that point for your IC, you would have been correct. But if you still went for the breaker, which is actually just the last down candle before that week, you would have still been correct. So at this point, if you use IC candle, understanding that an institutional candle is not necessarily the last candle, it could be 2, 3, 4 candles at once. Right? So markets came for the breaker and then we went lower. And then after that happened, we had another area of interest. This somewhere around there. Let's have this one. Did they hit it? Let me see. It didn't. It didn't actually hit this. Listen. It didn't come here. Okay, this is where I kind of took it very serious because I was looking at this as, I remember this chart carefully now, clearly now. I was looking at this as equal highs. So I was expecting market to blast through and come to this point. And the market did not do that. So I think I took a lot of loss when I was trying to buy this guy and it did not happen. So I look at this as equal highs, market will blast through. So we will look at this. This may happen in the future. Remember something that liquidity must not be grabbed immediately. It can take a while, 2, 3, 4, 5 days. And sometimes it could take months. But so market has done what created a kind of internal equal internal bound static liquidity. So most likely in the future, if price is ready to buy, it will likely come for this, because you can see that, look at this now, this trend line formation that was built here. You can see that there was a trend line forming here. You can see how long it took for price to come and take it out. So it could take a long time for the liquidity to be grabbed. It must not be immediately, right? So I was kind of thinking the market might likely weak and enter inside the properly and drop that, but that didn't happen. And I think one of the points was because there was no imbalance. Because imbalance is kind of help to validate if price will come to an area or not, right? So then the price did not come there. And look at what frontline price did here. And this was where I got it wrong. So we had high, low, high. Look at the situation of this market. Oh, you know that we are bearish, right? So we had this lower high. We had this lower low. We had this lower high. No. It's higher than that. So it's not, that's not the lower high. Alright, so we had this lower high, because this was higher than this. The highest point before the new, so we had this lower low. So this was actually the lower high, and based on this, this was our range high, somewhere around there. Right. So I was thinking our price will likely weak above this equal high and then go up a bit. That did not happen. So market was respecting this range high. So market was respecting this range high. That was why market dropped down. Right. So if you're looking at this, I can see that there was distribution inside distribution. So look at this chart closely. We had a high here. Inside that, lower high, dropped. Okay. We had a kind of IC candle inside there, right? So we had a kind of run of stops inside there. At this point, the liquidity was kind of run through by this candle, right? And then market dropped down. So this was why the market sold off here. It did not go higher because of what? This institutional candle, this run took us and dropped down. This was why the market did not grab the equal high. That's the reason. It was respecting what? This redistribution, right? Market redistributed inside there and came back to mitigate this S&D IC candle. The market did what? Drop down. And even inside there was a redistribution inside redistribution. We had this high, we had this low, we had this high, and we had this breakdown. So at this point we had what a market was break of structure inside of this point here. I can see after the break happened, I can see it clearly closed below. Can I confirm that? Yep. Line chart. You can see it's clearly there was closed below. So you can see there was a clear break of structure inside the high, low, high, break of structure. Market actually went below that low using the line chart. That was a confirm. Alright. So we are back to the candles. So that was actually a break, and it was a very good break, displaced nicely. You can see this down candle went very well below, right? So markets came for that IC within IC, or it's also actually the IC, moving from low to high. So if you got a sell, it would have been nice. And you're targeting what to make a new lower low, and market what made new. So this guy is super bearish, and you can see bearish, bearish, bearish. Now the trick here is that okay. Now looking at the current charts, I can see something that the market is kind of giving a bullish structure on the daily time frame. And what do I mean? I can see that all the way from here, we had this low, we had a new low here, we had a high, we had a low, we had a high, we had a low, and then a high, and then a low. Right, there's something like a low high, but I'm just use this one. Right, I don't want to go and start doing several at all. So looking at this, we have a clear bullish break of structure. So we had a break of structure at this point here. So we might likely see a short-term buy, right? So I have a very clear break of structure inside there. And market might likely buy. And where would they likely buy from? From here. So you can see these consecutive buy candles. So we have an order block all the way from here. Right, 1, 2, 3, 4. It's a consecutive run that did what took us liquidity. So we have what a kind of liquidity grab here. Right. So it's not necessarily one candle. We have 3 candles. Right. We mark on the open to the open. Right. We want to see the markets give an evidence of accumulation inside it. So if you bring out your daily chart, your Fibonacci tool, so you can get to the discount level. Let me think of my cam box inside. So I'll draw from this swing low up to this swing high. So looking at for a buy anywhere 50% and below. So I'm looking at for a buy from the 50% and below. So I'm looking at for a buy anywhere from here. I'm looking for a buy. So we even draw that to this one. So this is our area of interest from the 50% down, right? Although it may react off this one, I don't want price to do that. Right? It may happen as a react off this open, but this is actually one IC candle. I suppose like let me mark this one now. How when you see consecutive candles, right, without retracement and all of that, your IC candle is actually all these candles, right? So for this, my IC candles, all four of them, which is actually another block. So I look at this as one candle, not 4 or 5 candles, right? So we're looking at 50% here. So this will become our potential area for accumulation. So let us see what happens there. All right. So if market drops down here, and we have an evidence. Right, the market does something like evidence of this an evidence. This is one of the entry criteria I teach my students. But actually, we have about 4 of them. Right, four techniques for making entries. Right, but this is just the popular one: the weak, the strong hands transfer. Right. So if you should buy inside there, let me zoom out a bit and check something. I want to zoom out and check something. I want to be sure that we don't have any liquidity close by. No. We don't really have any relatively close by. Alright, so unless maybe this, we have a standard liquidity. The market may not likely come immediately. And we also have this liquidity route right here. Right, so we have this liquidity. Okay, kind of looked below. It was actually grabbed. Looked below. Right, so this is also where I'm looking at short-term targets for now. Just matter, let's be watchful of that. But it mustn't get there immediately, right? So for this week, I want to see what price will do inside this portion, right? I want to see what price will do inside there. Right? Possibly, price may likely buy off there, and I can see imbalances from here down to here, down to here. There's an imbalance all the way. So there's an imbalance right from that point, right? Right from there, all the way down. So market might likely want to go and fill imbalance since we have this break of structure, right? And it wasn't only a normal break of structure, it was a double market break. So you see the market breaking multiple highs. It broke this first high and then broke the second high. So it's actually a very strong break. The market will break 1 and 2. This is actually a lower high. But more market has a lower high because I don't want to make it too okay. Let's also make it high should be. So I have lower high, we have lower low, I have a lower high here, and then a lower low. So we have that double market break. So most likely I see a buy. And this buy is only subject to confirmation. So if I find the confirmation inside this point, then that is a telltale sign that we might likely be going higher. Alright? So that is what I'm looking at for B75. I want to see what price does inside that point. Alright, don't forget over that the weekly is still bearish, right? So the daily, remember that market actually trends changes from whenever you see daily break, it's actually very significant stuff. So trying to read something. No, can't be talking about region. I'm trying to read something. Okay. All right. So want to see price give us that accumulation anywhere below 50%. So we have that. That's a buy. So I've posted this on the Telegram community, so you can have it for future references, and you don't see I didn't tell you, right? So we are almost 30 minutes into this call, so let's just be quicker. Let's head over to VIS10. That was I think the second highest. Let me be sure. Let us confirm that. So VIS10. Okay, VIS10 at 25 left. So we can now head over to VIS10. Volatility 10, right? Why? Let me load up this stuff. Let me load up for currency pairs. Let me load up trading view because we'll be putting the currency pairs very soon. So let us load up trading view. But it takes time to load. Let me just load it up at once. Right, trading view. Load up. Right. So let's go to VIS10. Alright, so let's take out all this markup. Now looking at this guy, let me see if I can get VIS10 on my weekly time frame. Right, so let's look at the weekly time frame of this 10. So sharing my MC5 again. Okay. Oh. Alright, sure. So now we have this 10. This is the weekly time frame. So let's look at this 10 has been doing. So relatively we have been bearish. You can see the market super bearish of this 10, like super bearish. And now what do we have here? We have this break. Like market broke. Obviously, this is a high. Right? Right. So market broke this high. We have that kind of bullish break. Market breaking this last lower high. Alright, and we're looking at on weekly time frame. I expect the market to come to give us a higher low. So I was looking at this smart money cube inside this last down candle before the explosive low. So this is what I expected, or I expect, or rather, I expect on the weekly market will likely come for this cube. And if you look carefully, we also have a set object shape. Right angle. So we have kind of IC here. What did I see do? What did this IC do? So we have two areas of interest on this guy actually on the weekly time frame. So we have this and this smart money cube. And this was that last run that just grabbed the liquidity. So I had liquidity at this point here. Alright, so for the markets, let me see. Because I'll show you what it was. Okay, it wasn't actually that last push. The move was actually from somewhere around there. Alright, the market opened, but it's also the drop down, somewhere around there. Alright, so okay. So literally, when the market comes to 61, the market comes to this area, start looking for for buys. So what the market is just doing is just inducing, it's just doing forming liquidity, inducing buyers. So I'm still bearish on this guy, at least to get down to that point. Now let's go to the main chart. I'm kind of sloppy with MetaTrader. Alright, I'm kind of sloppy with MetaTrader. Alright. Okay, this is V10. So look at V10 structure. Remember, we have that we're looking for that, but then just drop from swinger to swing low. So we can just mimic the weekly time frame. So I'm going to mimic the weekly time frame. So we have that swing high, so swing low. So we're not set at the 50%. Yep, we're not set at 50%. So we can still see more sales here. So for me, for now, I am still bearish on this guy. Alright, we're now to 50%, and I can see that there's a likelihood the market may come down here, right? It's likely come here, or okay, this was a run. Okay, this was a run I took out the liquidity. It's actually the consecutive run, so somewhere around there, down to this point. So that's actually the weekly PY. When the run started here, and that was grabbed liquidity. Right, I'm trying to just make it as simple as possible. So we have two areas we're looking for a buy, either there or there. So, and our imbalance is down there. You can see imbalance is all down. So this will be a first POI, second POI. Now let's look at what market is currently presenting to us. Let's go to the 4-hour. And obviously, you can see a bearish structure. Remember that we're likely going to go down. So I can see a bearish structure on this guy for me. And I don't need a prophet to tell me. I can see we have this low. So we have a bearish range on this guy. So currently 4-hour is bearish. And we have objectives to the downside on the weekly and the daily time frame. So would likely see more sells. This sell only gets invalidated should price go above this range high. That is where this sell. What is the forward setup, right? This is a 4-hour setup. So it's not 50 minutes. Because I know this is actually counter trend because market is bullish. So looking for buy, but this is a 4-hour chart. And we have objectives to the downside. And I can see that price has done what? Grabbed all these highs. You can see all these highs have been grabbed by this up count. So market has kind of played this foul play. Alright? So we have this It's all is grabbed by what? All this candle, right? So this is so how much liquidity grabbed here and all of that. So market might likely drop down. So market broke below and then came back for this bullish run. All this bullish was actually was one institutional move, right? So market has hit the very last candle. For those of you that have sworn that it must be last candle, you have seen what you want to see. So you have hit that last candle. For those of you that always wants to be the last candle, so that's satisfied, that's clear. All right. So now what are we saying? Market has wicked below here. So we're likely to see. So we're looking for evidence to go lower. So I can at least go to discount on the weekly and the daily. So I can see this run, liquidity run. All right. What do you want to see? I want to see the market break this low. So this low is now my area of concern. I want to see price break this low. Then we'll now have a sell setup. So this idea is subject to change. All right. So you can see the market break this particular low. Then we have what a bearish structure, and then we can now enter to it. So should in case we have the market break this low, this last low, right? So if you can find market do this. Although I can no, it's not that. There's no total sub yet, right? So if the market can break this overall low, then we have an idea. So we like to wait for the market to do this, break down, break test, and then go lower. Right, this is what I want to see on this guy because we have downward objectives, right? So it's actually counter trend, but this is actually the best possible scenario of the step for now because we have buy objective below, and this is a 4-hour setup. It's not 15 minutes counter trend, it's 4-hour. I should give you that telltale sign that it wants to go short. All right, so we had this low. So let us see. All right, so if you can have market break this low and come for retest, bam, that will be beautiful. So now simply, if you can have that, you can simply highlight maybe this last buy candle. All right, so I can see kind of grab here already. I can see another liquidity grab. I can see the market grabbing liquidity inside there as well. Although this is kind of risky, relatively quiet. So if you're going to try to set this, you should be looking at this as your external range, this particular high. So look at that as your range. Right, that's be your area of interest from that open up down there. Right, so you'll be safe. So if you can have this break and then retest anywhere inside, if you can have that retest instead, so a beautiful set to take price lower. Right, that's all I can find for this 10. I'm not using the bigger time frame structure. I'm just giving what I expect on this guy, right? So let's look at the next thing. All right, so okay. Let's see. So we have that. The next thing was V75. Disclaimer: these are personal opinions and should not. It's not an indication to go and trade live funds, all right? So when we have markups like this, just giving the disclaimer, it's not an indication to go and trade live funds. I'm not trying to tell you to go and trade your life account because whatever you do in your life account is solely your responsibility and your responsibility alone, right? You will not be held responsible for whatever actions. If it's profit, it's up to you. If it's a loss, it's still up to you because I didn't hold your hand and place a trade for you, all right? So it's just personal opinion, right? And the market has the ability to not respect it, right? So that being said, let's head over to this 10. It's 25. I don't trade this guy. So let's quickly go to the daily time frame. Right, what is what market is doing on the daily time frame? Now, okay. Okay. I can see. Let me zoom out a bit again. This guy's relatively bearish. Right, so we had this low, lower high, lower low, lower high. I want to mark everything lower low. Just kind of skip some things lower high, and then we had this low. All right, and then market did what displaced this high, like bam. All right, now we have markets giving a bullish break. So market has given a very strong bullish break. why the market still at that point? Let's see. Came balance. Right now I have a bullish break on this guy daily time frame. Right, and now we're looking at the last consecutive down candle. So when I did it this way, yeah, so I still hit that zone. Right. So we have a frame up on this guy. I have a frame up. Now, what do we see again? We have a kind of accumulation. We have this lower high, lower low, and another break. Like, all right. So we have a counter break here. All right. Okay, we have bullish structure now. So now what are we looking at? We have this consecutive down candles that grab what this all these lows. So these lows are captured as well. These are area of interest now. All these lows are captured by what? This trend line, by this consecutive down candles. We have another what? Area of interest, right? So we have an area of interest inside here. Right. So this is it. Let us find out. Let's look for the discount level. So swing high to swing low. So I have discounts, okay, 50% down. So right. Okay. So you're looking out for a buy inside it. So the market can come inside this region. What do you want to see? You want to see maybe the 1 hour 30 minutes to give us that evidence of what? Accumulation. Then we will not take price what? Up. So if that happens, we're likely going for what? This point. And wow, I can see liquidity building. I can see trend line forming here. That will be a juicy setup if we can have it. So we can have this buy. We're going to blast through this trend line liquidity. Bam. That will be beautiful. All right, so when the market gets here, we look for evidence to go long. All right, so I have a bullish structure on this guy. So, right, so look for a reason to go long. Market comes inside this region. All right, so that's what I'm looking at on this guy. Let me check. I'm seeing something in 30 minutes. Now, this is what I don't support. Because I'm seeing the market giving a counter sell setup. I don't support that you should do this, but I can see it already. And it has gone far already. It has gone far. High, low, high, break. Retest of what? Breaker block. So I can see it clearly. So we have this high, this low, breakdown, breaker block. So anyone that was watching it was causing a sell, and this happened that was above this high. Right? Alright, so okay. So these have been a nice sell. If you like counter entries, but for the overall trend, expect this. Now I'm sure that somebody will now see this. This is where I can see something. This is where many of you get injured. Now we are seeing that the market has to go down to accumulate, but someone may be seeing this as a break of structure. The person will be like, lower high. They'll be like lower high. They'll be like lower high. They'll be like lower low. They'll be like break of structure. This is a trap, folks. It's a trap. Don't you shouldn't be trying to do this. Right. I'm not saying it's not play to play, but this is likely a trend line. You can see it's already building trend line. What do you expect? Bam! Price is going to run through it. Expectations. It's not an indication that you can't trade it, right? So back to 4 hour. That is actually a trap forming. That is internal liquidity forming in this chart. So I can see there's no reason the market should do that. So let us see. We want to see the markets come down to our area of interest on the 8-hour time frame. So this is 8-hour time frame. So once the markets come down to our area of interest, and then we'll take price low and higher, right? I can see, I'm even seeing something here. I'm seeing that 4 hour is still giving that bullish structure. For me, I'm not going to be looking to buy this because price has to come down to the bigger time frame area. I can see that we have a higher high, higher low, higher high. But remember that the market is not textbook. Market was not always not. In fact, you can never see the market continue doing this. I always tell my students this in a private mentorship. You can't always see the market doing this higher, higher, low, higher. It's never going to happen. What you will find is higher, high, higher, low, higher, high. liquidation, higher high, retest, higher high, again, another liquidation. Sometimes do something like that, just blast on the way up. It doesn't even come back, just run. When it even come, it just come maybe a little bit down. Just maybe tap this breaker block here. Tap this breaker, this is a breaker. Just hit the breaker and just run away. It doesn't even come down. It happens. Alright, so this is like one of those scenarios that market is creating a kind of false trap. For me, I can see that this is way above discount. Right? So if you draw your fib tool from here, you can see that this is way above 50%. You can see way above. And you shouldn't try to take a buy. Even if you can see a bullish structure, it is not high probability. So that's what I have on this guy. So it's a short-term sell, so they buy POI. So remember again that this is not an indication you should go and trade live for. I'm just giving you what I expect. You can do your own confirmations, whatever you use, and then you use it for your trading. So I think I'm done with synthetic indices, right? So let's go over to currency pairs. And I'm done with synthetic indices. Done. All right, so let's go back to the brass tacks, which is the currency pairs market. All right. Okay. All right, so we're done with this currency market. Let me stop recording this so I can. Oh, should I put it together? Should I stop recording for currency separately so that it won't be like together? Or should I just continue with one video? No, let me continue with one because to make it stressful, operating 2 times. Let me operate at once and it goes at once. You're not operating this video twice. Right. Currency pairs. So can I just delete this and it's not be dragging my data? All of that. So amazing. Right. Currency pairs market. So I'll just be reviewing just 3. I just want this class to be not less than 1 hour 30 because I have another class with the private students by 7:40. So I'll just look at maybe 3 pairs and that is it. You can use the idea to frame other. Look at that, right? I'm not going to be. I'll just look at the pairs that many people trade. That is EU, GU. These are the major that many people trade. EU, GU, and GJ. And that's what I'm looking at. EU, GU, and GJ. That is all. That's what I'm looking at. Just 3 of them. Those are the major pairs that people trade. Create also EU, GU, and UJ, like USDJPY, because USDJPY is actually a bullish trend. Right. Let's wait for this to come up so I can start currency pairs. Is it me? Is it my network? Something of that sort. Alright, it's loading up. Why is it taking so much time? Alright, so let's hit my watch list. So one thing you must always do before you actually trade the USD pairs, you should always look at what the dollar index is doing. Because the dollar index is the strength of the dollar. And dollar is the most traded currency in the world. And that is the powerhouse of the financial market because most of the goods we buy, if you check online, if you want to buy maybe a PS4 or something of that sort, you usually see it in dollars. You will not find it in Naira. If you're checking online, you see it in dollar. It won't come out, right? Unless it's maybe something like Jumia or Konga, all these Nigerian stores. But if you're checking Konga or Jumia, if you're checking online, like Alibaba, all these foreign countries, you usually see dollar. So most things are priced in dollar. Right? Even equipment, if you're buying it, it's usually bought in dollar. That is why dollar is one of the most used currencies. So you should always check the strength of the dollar, right? And I'll give you an indication to know what direction to be trading. So we start on the DXY. Right. Start on the DXY. Right. Remember that if GSY is bullish, EU should be bearish and GU should be bearish. So any pair against the dollar should be bearish if dollar is bullish, and the reverse for and the reverse. All right. So we are now let us okay. Kind of just back up. This was the last back up. I need to refresh all this. So now look at this. So let's look at the daily time frame on the dollar. So start from the daily or the dollar index. This is the representative of the strength of that. So inside that monthly IPA, right? So inside that monthly imbalance, right? Inside the monthly imbalance, I can see dollar has been super bullish, and this is why prices of things are increasing. That is why the dollar went from 500 and 2004. As of last year, the dollar was about 480 or thereabout. That's about 480, but now it's currently 730 or thereabout. So this is the reason why that happened. Dollar has been super bullish. So when dollar is bullish, things tend to get expensive because the cost of importation and all of that tend to get high. And whenever the dollar is bullish, any pair that's against the dollar drops because the dollar is gaining strength. It's just like a tug of war. Imagine two people dragging a rope, maybe in a tug of war. If one is gaining strength, likely the one is going to do what? Gets weaker. So dollar index. Now dollar index is currently bullish. We have high. Look at the current structure: high, low, high, low. So this guy is actually very bullish, right? Our market has obviously come forward. This OB, this last candles, right? So market is reacting on this other block, right? It hits the open of it. The market is coming up. So it's a very likelihood the market is going to make a new high, right? So using the daily time frame, we have the likelihood that dollar is going to do is go higher. So let's go to the 4 hour. We have a very likelihood that this will go higher, right? And now even the 4 hours kind of giving something. Now we had this break. What did we have next? We had that's how dollar dropped a bit. Market came maybe for this breaker block. So we had this market came for this breaker block inside there. And it did not actually go for IC candle, it really came for the breaker block. Sorry. What am I doing? So market actually came for this breaker. Right. So market came for this breaker, this last down candle for the swing high, for the Judas swing that took out break. So market came for this, right? And even if you drew it this way, you drew it like this, like all these consecutive buy candles, right? All these consecutive buy candles, mark the open of it, the open. So market came for the open of this whole up move. So even if you use IC candle, you're correct. If you use breaker blocks, you're still correct. Right? Anyhow you want to do, if you use this as your IC candle, open of it all the way up, you're correct. If you use what? A breaker, last down candle for it, you're still correct. So anyhow you did it, you are correct. So you had what? A breakdown. I'm coming. All right, so we had that break. What do we have? We had on this lower high. We had this lower low. There was a kind of low here. The market still wants to make a high here and then low. So I think we're seeing the 4 hour align with what the daily. So you're having high, low, break of this recent lower high, and then we're having let me see something. Okay. So now market has broken this last lower high, giving us a confirmation of what the daily is saying. All right. So what do we expect? This is actually far from reach, but since the daily is bullish and the 4 hour is giving a bullish structure, it's only likely that we might see this market come back inside this will be this last consecutive down candles that did what swaps liquidity. All right, so had the liquidity sweep inside of here. So we are bullish. We have a bullish dollar. So the market comes back a pen and then most likely go for this high. So we'll likely see the dollar give a bullish structure. The reason what the market is giving us is tipping us his hand. All right. So currency daily is bullish until that daily time frame breaks. Then we should not trust sells on dollar. Daily time frame break will really give a very good indication for itself. And you can see it seems as though the daily bullish structure wants to hold. It wants to hold. It did not. The markets could break all this. Then we have had our what? Our bearish sentiment. But now this is not. It's not tipping us his hand. It's not tipping us his hand for a buy. For a sell. So likely we likely see the markets come for the open of this week. Hit it and then likely what trade for this overall high. So this will be our liquidity target. This overall high. I can see liquidity target here. Here. This week here. Right? So we are bullish on this guy. I'm bullish on DXY. So we likely bam and then or we can also run for this highs and take it out, right? So that's why I expect on dollar market to come back here and then go higher or just run through whatever it feels like doing. It's up to them. Alright. So since we are bullish on dollar, the reverse should be the case of what? EU. Right? Now look at EU, you can see that dollar has been bullish, like I said earlier. Whenever the market is bullish, expect what? A bearish dollar. I mean, okay. When the market was bullish on the dollar, expect the reverse on the EU. Now, what are we seeing on EU? We have lower high. Had this lower low. We had this lower high, lower low. What can we see here? What can we see? Liquidity run. And then market has come what for the open of that. So you just mark the open. Market has hit the open of that candle. What do you expect? Market will do what? Make a new low. Like, is this not giving you the same idea that DXY is giving? If DXY is giving bullish structure, likely EU should give what? Bearish. So you can see that these things are actually tipping you his hand. That he wants to do what? Go short. So for EU to be bullish, market must break this overall high. Then we now have a bullish sentiment on EU. That is short term because sometimes it may just be the market. Sometimes for every break of structure, there was always an IC. Market sometimes market will just break high and then break low. So give you what? An IC. So for I usually confirm a trend when I see market break high, come down, and make a new high. This is what we call a double MB. Market is giving a double market break, giving us that telltale sign that it's likely going to go higher. So we had IC candle. We're setting what our overall target is for this low. So overall target. You can target this low first. This I can see liquidity here. This low, first target, and then this overall low. Right, so we have two liquidity targets, 1, 2, bam. Let's go to the 4-hour time frame to see what we should expect on the euro dollar this week. Now we can see we had two targets this week and down. And I've already cleared this one already. So what can we see here? Look at the line chart as something. It's 4-hour bearish already. Listen, line chart. You can see clearly. So we have this high, this low, this high. Market has done clearly gone below this low. So you have a break of on 4-hour time frame. I don't need the profit to show me that. Alright, so what do we expect this week? Right? What can we expect? So as clearly closed below the last high low. Just even if you use the close prices, look at this is last low. As market has clearly closed below it's very clear. That's the last high low. Damn. So what are we expecting? We're expecting a bearish run. So now we have to look out for setups that are in tandem or support this bearish run. So we have broken this low. Okay, I can see a mitigation block here. Right, failure swing and then breakdown. So the market might likely come from this point to sell down. So look at this last down candle. So keep an eye on this down candle. This is this mitigation block. Right, last down candle before the run, I could not make a new high and then break lower. So you can see the market come inside there. That would be a good area to sell. I don't really think it's but I'm not seeing this, right? So there's no that kind of there. Or if you can see the markets give you any that sell idea, it would be nice. Like I think on 30 minutes it gave one, and I think I caught this trade. We had a smart money cube inside there. And the smart money cube. Market came for it and then bam, it went lower. And not only that, we have was a kind of IC candle here. All of that. So let us be careful with this guy. Let us be careful with this guy. Alright? Bam, broke down. So since we have gone down, let us see. On the let's go to 2 hour. So there are possibilities now. Markets are likely liquidate these highs, come for this break, this mitigation block, and then trade lower. Or markets may give another sell setup. So what I'm saying is that a sell setup is more probable. Don't try to buy to sell. I'm giving you the best advice. Don't try to buy to sell. Wait for the market to get to CPY. You mustn't have to be trading all the time. All right? You mustn't be trading all the time. Wait for the overall move and then you go with the flow. Look for only sell setups in a bearish market. I know that some of you never hear this until your account to tell you why you should not do it, right? But now I'm giving you for free. This market is bearish and it's only a wise thing to do. Look for sales. Again, this is not an indication to do what? Go and trade live funds. So I'm telling you, look for sales. I didn't say you want to trade on your live account. It could be a demo or whatever, right? Demos will be preferable. What I'm saying is that expect a bearish run. And I'm not asking you to trade a live account with these ideas. These are personal opinions. I'm not asking you to trade live because your losses are your responsibility. I will not be held accountable for that in any way. All right. So now let's head over to the last, second to last. G, then we look at UJ, right? Because UJ, I know many people trade UJ. Okay. This G. G is likely now. You know that whatever you expect on G, you expect the same thing on what? EU. So this guy is bearish. Let us just remove it. Just run to the data entry quickly. Just run to the data entry. Because the S1 is bearish. So bullish. So we likely expect the same thing. So I can see a run. I can see how EU and G are looking alike. They are correlated. So we have this liquidity grab. Market has hit it and then we're likely going to go out, make a new low. Right? Likely, not must. So we have a bearish run. And as long as we are above this count, it's nice to just keep selling. Alright, so let's look for at 4 hours. We have that bearish setup, right? I'm giving you the brass stacks, folks. So now we have this on the 4 hour. Let's go just hop on to 2 hour. Let's just be hopping up. Alright, so this guy actually okay. So looking at this, what can I see? Trying to quickly see the structure of this market. So I can see higher high, okay? Because it's market made a high here, right? Market there was a high here. Had a low, had a new high, and then was a break of structure. So market broke this structure. So I had that break of structure inside here. So I had this break of structure here. And the market came for retest, you know. It came for this last consecutive buy candle. So I had this run to the upside. Markets came, bam, hits, and then it's trading lower. It's against some kind of IC candle here, trading lower, and then I have the bearish range. So looking at this guy, I can even see current bearish range. So. What do we expect on? This is actually giving a clean setup. I can see a grab of liquidity inside here. So our market has been broken lower. All right. So I have this break structure here. So likely expect this to happen this week. I'm also interested light funds, expect market to come here and sell off. Right. So I'm looking at this as an area for a sell. You can see it to be beautiful, right? So market hits here. I'm likely to what? Sell off there and go lower. All right. So this is actually very clear. So let me take EU. Let me see 1 hour EU. EU was actually a breaker, right? A mitigation block. All right. What will you see on EU again? Let's go on 2 hour. Okay. Yeah. So it's still the same thing, up and down, right? So like I expect GU to run. Now, I've given you this. Now I'm saying something again. Remember, you're not trying to catch this buy to this point because it might likely liquidate you. You're not trying to catch this buy to here. Wait for the market to come here and then you sell. Because the market can do something like this. It might do something like this. Just stop here. Now drop down. Still stop there again. Drop down. Before eventually doing what? Coming to that high. And then how would you know that it was going to do this? No way. So wait for the market to tip you his hand by coming there first before you look out for yourself. That be a glorious sell, a sell to behold. All right. Now, last pair, and then we call it a day. Let's head straight to UJ. The let's go to the UJ. This is the last thing. I'll just do the rest for myself. This is a free class, right? So I don't have to do everything for you. USD JPY. All right. All right. USD JPY. All right. Remember that what you expect on DXY, expect similar on G, because actually the USD. So I've visto that as dollar index has been bullish, USD JPY has been bullish because it's actually USD JPY is actually move in tandem with the dollar index because dollar is at the front. That is what basically means. That dollar is growing relative to JPY. So you have that super bullish structure, and I don't even know what to even say. This guy has been super bullish. Sorry. The guy has been super bullish on the weekly time frame. Just look on the market as doing. Just came for this other block. Can you see? Open of it higher. So, the market has not even planned to retrace. Even if it retraces, it should be likely come for this too. And likely, bam, go higher. So, market this is actually an area to look out for weekly continuation pattern. But let's look at what the daily is doing. What the daily is doing. Daily is still bullish. Give me a moment. Give me a moment. Back to what we were doing. Now, these guys are super bullish. You know that on the daily time frame. What should we expect? Man, I cannot expect anything currency on this guy because for what I can see the market has done what grab it to the upside and then still grab it to the downside. Right. So I don't think there's any I don't really think there's any idea on this guy currently because this guy can do anything. But what I can see here, the market has grabbed to the upside and also grabbed to the downside. The market is super bullish. Right. So look at the 2 hour. 2 hours is actually bearish, but I wouldn't be trying to sell this because of what the dollar index is doing. So for me, a buy is still more probable on this because why? 4 hour is still what? It's still bullish. High, it's not close above, just liquidated at still one time. So for me, I wouldn't be trying to sell this guy just yet. I'll wait for the extra to give us that bearish structure. You can see 3 hours also close above it. So this guy is still bullish. Still bullish. Look at the close prices. Line chart. Can you see? Line chart. High, low, can see. Has actually gone above this previous high. So bam, we have that bullish structure. Right, so market is still bullish on this guy. So what should I expect? I can see, although I wouldn't really advise you trade this, but I can see sort of here. We have this run and this break structure. So the market has kind of tapped it though. Yeah, has tapped it. So I don't think there's any idea on this guy yet. I'll just stay out of UJ. I'll just stay out. I honestly want to trade in line with the smaller time frame. All right, I can see, okay. I can see something on 1 hour. All right. Although I wouldn't advise you take this because the market is actually so high. Right? You want to buy low and sell high. The market is actually very high. So we can see something here. You can see the security run. But when the get in line with overall time, you can see all this graph. So the market can hit this we're looking out for the super run. And where will be our targets, right? To be what this overall high. So this overall high can mark that out. I would advise remember this is for educational purposes, not like you can't trade life funds. Remember, I'm not advocating you can't trade life funds with these things because yes, don't come across me because I want to respond. So we are still having that delta sign to go higher. Right? So market comes down here, most likely will be expanding to whatever overall high. So that's actually what I can see on UJ. Alright? These only things I can see on UJ. So market comes in, you might like to wait for confirmations and then take price higher on the UJ. Alright? So that is it for now. I hope this was insightful. I have a class in the next 2 hours, 40 minutes with private students. Right? If you want to be part of us, you can still join up before then because we'll be going. That is where we actually have in-depth teachings, right? We actually come and take our time to break complicate topics into little things, and then you can see our students' results. They're doing well. We have 400 traders, $15,000, 5,000, and all of that. I don't know. And they're doing well. I think one is even going for 20K current. He's running the challenge on 20K. I'm wishing him the best. Most likely he will pass it, right? So, from the part of us, you know what to do to contact me and all of that. So, how this was insightful. This was helpful. Have a wonderful evening. This recording should be uploaded on the YouTube community later today or maybe tomorrow morning, all right? I just try to do it this night because and all of that. So, I hope this was insightful. This was helpful. Cheers and God bless.